Hi everyone, let's go through my 3 macro bullish scenarios and see which one is preferred. The first one is that this move up over here is a big wave 1 followed by a wave 2 that is already finished, and now we're looking for a wave 3 to the upside. There are, however, 3 things with this scenario that make it an alternative scenario for me. The first one is that this wave 4 over here is very short in time compared to this wave 2. Usually a wave 4 takes more time compared to a wave 2, but in this scenario you can see that wave 4 only by eye already is a lot shorter in time compared to wave 2, which is very rare. It did hit the 0.236, which is a target, a Fibonacci target from the low of 2 to the high of 3 for a wave 4, so that is fine, but time-wise it does not look very nice. If we then look at the correction, there's 2 things going on. The first one is that the correction only hit the rare target of a wave 2, which is the 0.382 pulled from the low over here to the all-time high. The more common targets for a wave 2 are the 0.5 to the 0.786, which are sitting at 14.6k and 6k. And as you can see, we missed out on hitting the 0.5, and also, to be honest, the 0.382 is not very well respected. As you can see, the candles are going everywhere in between over under the 0.382, which is not really something I like to see, but officially it's not necessarily a reason why this scenario is invalid, because it did hit the 0.382, so the potential is there to move to the upside. Now the last thing that makes this an alternative for me has to do with time. So usually the wave 2 over here takes at least 38% of the time it took to form a wave 1. So this is the time it took to form wave 1, and wave 2 over here took less than 38% the time it took to form wave 1, which is very rare. Usually a wave 2 will end after the 0.382 Fib time pulled from the low to the all-time high over here, but as you can see the candles closed before, which makes it also more rare and also less likely this wave over here is a wave 2. If we then look at the second macro bullish scenario I like to show you, we again have a 1, 2, 3 over here, but now the wave 4 is down here in an ABC expanded flat, and we're now in a big 5th wave move to the upside. After this 5th move we would then of course correct to the downside. Now in this scenario there's also 3 things that make this an alternative for me. The first one is that over here we have an A, B and a very long C. Now usually a wave C is actually the shortest wave in an expanded flat ABC. It's an expanded flat because this wave B took the highs of the origin of A, and a wave A is a 3-wave structure followed then by a 3-wave in B and a 5-wave move in C. Now because wave C is the only impulse in an ABC expanded flat, you would expect wave C to usually be shorter than it takes to form a wave A and to form a wave B. However, in this scenario, you can see the Fib times here at the bottom of the chart, and this wave C is 5 to 5.5 times larger in time than wave A and wave B, which is ridiculously long and also very rare. I'm not sure if I've ever seen it. The second reason is that this wave C is very deep. So if we look at the most common target for a wave C, it's inside this white target box. So it's basically the 1.618, which is a trend-based Fib extension taken from the high of 3 to the low of A to the high of B. Toggle on the 1.618 with log scale because I'm on the log scale chart, and you will find this level. And also have the 1.618 over here, which is a Fibonacci pool taken from the low of A to the high of B. Now it's fine if we would wick below this level and then kind of close inside and then continue our way to the upside. But in this case, we closed multiple weekly candles, as I'm on the weekly time frame, multiple weekly candles below the 1.618, and we've also been ranging on top of this 1.618, which makes this wave C very deep and also kind of invalidates it. And then the last reason that this is not my preferred scenario has to do with this wave 3 over here. So over here we have a 1, 2, 3, 4, 5, which then should be an impulsive move to the downside, right? But the target of a wave 3, the minimum target for a wave 3, is the 1.618, which is sitting at 14.6k. But as you can clearly see, this wave 3 did not reach the 1.618. Instead, it actually reached wave C targets of the 1 and the 1.236 trend-based Fib extension, which makes it more likely this is a 3-wave structure and not an impulsive move to the downside. So this wave 3, the minimum target again is the 1.618, and it has not been reached. And if we then go to my primary and preferred scenario in the bullish time frame, the macro bullish scenarios, then we have a wave 1, 2, 3, 4, 5. What is nice about this scenario is, first of all, wave 2 ended very nicely in the golden pocket area between the 1 and the 1.618 fib time, which is very nice. Then we eventually have a big wave 3 to the upside, and now you can see that this wave 4 is only part of a lower degree of the higher degree wave 3. So we now have a yellow 1, 2, 3, 4, 5. And in this scenario, wave 4 did take more time than it took for wave 2 to form. So that is actually very nice. And then inside we have another 1, 2, 3, 4, 5 right there. Now, if we then look at the low of this wave 4, there's actually three things that make this low very, very interesting. First of all, this 0.5 has been very well respected. As you can see, basically candles closing on top of the 0.5, which is also the maximum target for a wave 4. The fib is pulled from the low of wave 2 to the high of wave 3. The second reason it's nice is that the low of the weekly candle is literally made on the 0.618 fib time taken from the low of 2 to the high of 3. The exact week on the exact 0.618 fib time is very nice confluence. And then finally, we also had a very high volume peak here at the potential lows, which of course with the other scenarios is also kind of valid. But with this scenario, it's nice that this happens during a wave 4, as it also happens over here with a wave 2. So you can see that if this is one of the corrections, you see a very nice high volume spike at the low of the correction, and then another high volume spike at the low of the correction over here for then a potential wave 5 to the upside. And if we look at this wave 5 to the upside, then in this particular scenario, the most common target is between 98k and 174k, which is the white box over here. And the more rare target is basically between the all-time high and 98k. So I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at my next Bitcoin update later today at 7 p.m. Central East European time. Bye bye.